So in this video, I'm going to share my portfolio management strategy that I use to target 15% per year, just buy and hold. So if you can get 15% per year, I think that puts you at a fairly good trajectory for retirement and building your nest egg. I recently just got my portfolio management license, and this is my plan to serve my clients on how to invest their retirement accounts. So let's get started. This strategy focuses on US equities and how to get 15% per year on average for the last 10 years. So the first index fund I use is S&P 500. So the average return there is 12.88%. The second index fund is QQQ, 17.9%. The third index fund, it's a QLD, leveraged version of the QQQ Technology Index Fund, and the average return for the last 10 years is 28. So if you equally buy S&P 500, QQQ, and QLD, 1/3 each, then the weighted average return you'll get is 15.6%. And this is the piece of paper they'll get for the benchmark return for the last 10 years and the last 5 years. And this is just buy and hold. Like, you haven't done anything special. There's no skill involved, and you don't have to pick a single stock. So after fees and all that jazz, the weighted return is around 15.5%. So that is pretty good, and a lot of people are happy with this return. So my role as a portfolio manager, it's very simple, is to get in and get out into these indexes at the right time. And I call it the SMART index strategy. And if I'm able to do this properly with my AI tools and my data science, machine learning background, then it should target somewhere between 15 to 25% after fees. So that is really the value of a portfolio manager. And basically all that focuses on is to avoid certain bear markets, certain bearish months. The market goes up around 50% of the time, it goes down 50% of the time. So if you're able to avoid just a large portion of the bearish market, you'll outperform the overall market, which in this case is S&P 500. And if you're just a buy and hold investor watching this video, just by investing in QQQ and also QLD, which gives you some leverage, will also allow you to get a better return than just buying S&P 500. So the strategy I just shared with you is perfect for a retirement account. It mainly focuses on capital gain. And if you're looking for monthly passive income, then that's when you'll need to learn how to invest and use monthly passive income strategy. So if you're interested in how I invest using the SMART index fund strategy and also the monthly passive income strategy, they can click on the link below and register for the free webinar. For the SMART index fund strategy, this is on the low risk because the average return is only around 15% here. And the monthly passive income strategy, the average return is around 30. And then I have actually more advanced strategies that are within my company that I can only use in the company. So that is reserved for the future hedge fund and for people who invest directly in my company as one of the early investors. So if you're interested in learning more, they can click on the link below and register for the free webinar, How to Get 30% Return.